Emotions are riding high. Institutions are doubling down on Palantir shares, but it seems like their management is doing the opposite. Is this a bad sign? Is Palantir in huge trouble? Well, let me explain. Disclaimer. As you may already know, in the past few days, Palantir has been grabbing the attention of huge institutions and funds. And not only that, some of them are also doubling down on their Palantir shares. Here are some of the huge funds that just got more shares of Palantir. UMB Bank, a fund with billions of dollars in their pockets, just increased their position in Palantir. They almost doubled their current position. There's also a new institution who got fresh shares of Palantir, and it's their first time to buy stocks of the company. Sanctuary Advisors, LLC bought a total of around 140,000 shares. They're grabbing more and more. Even retail traders are doing the same. They're also securing their positions in the company. And here's what's more interesting. Huge funds and institutions doing this right before the potential listing of Palantir on the S&P 500 says something. It could be an indicator that something huge is happening to the company. Perhaps they already have info on who gets added to the S&P 500. We can only speculate about this. But here's what's interesting. On the other side of the fence, there's a whole different story happening. While retail traders and funds are buying Palantir, it seems like their executives are doing the opposite. How so? One of their directors, Alexander Moore, just dropped a huge bombshell. He just sold a huge chunk of his Palantir shares. And this has started a rumor mill that he could probably see something in Palantir's future. So, what could this mean? Generally, when high-ranking officials of a company sell their shares, it usually signals something bad. When a high-ranking executive or director like Alexander Moore sells a large number of shares, it often triggers concerns because insiders typically have the best understanding of a company's future prospects. And this usually has a domino effect on the market. Investors might see this sale as a signal that Moore doesn't believe the stock will perform well in the near term. It could also send a message that the company may face challenges that haven't been publicly disclosed. This scenario usually brews even more rumors. And more often than not, it hurts the company's reputation. What do you think of this? Let us know your thoughts below. Even though selling shares can be for personal reasons, like diversification or needing cash, investors might still perceive it as a lack of confidence in Palantir's growth or strategy. This perception can lead to broader uncertainty. The market tends to react emotionally, which is totally understandable. But such moves by insiders can cause other shareholders to follow suit, creating selling pressure on the stock. And here's what's even more concerning. The company's future valuation could suffer, especially if this triggers media coverage or analyst downgrades, amplifying the negative sentiment. In essence, while Moore's sale alone may not cause immediate harm, the psychological impact on the market could lead to a more cautious view of Palantir, affecting its image as a company with strong insider confidence in its future. But is this really the case for Palantir? Is Director Alexander Moore really doubtful of the company's future? Does he think that they won't get listed on the S&P 500? Well, not really. In reality, the reason for the sell-off is so far from the revolving rumors. It's actually a part of a predetermined trading plan which was established last November, 2023. This isn't some decision he just made. So, what's the point of this predetermined sell-off? These plans allow company insiders to sell stock at predetermined times, which helps them avoid accusations of trading based on insider information that the public doesn't have. In a capsule, these are done to protect both the executives and the investors. The reason these predetermined trades happen is to protect both the insider and the company. Executives or directors, like Moore, often have access to confidential information about the company's future, and this gives them an unfair advantage if they do use it for their gain. Good thing is, Palantir's executives don't seem to be using this advantage, and they're playing fairly. Without a structured plan, their stock sales could be viewed as suspicious or unethical, raising concerns about whether they are benefiting from inside knowledge. By setting up a selling plan in advance, they agree to sell shares on a set schedule, regardless of any new information they may come across later. This ensures that their trades are transparent and not influenced by any inside knowledge. It's essentially a safeguard, both for the insider to avoid legal issues and for the market to maintain fairness and trust. Did this change your views on Palantir? We'd love to hear your thoughts below. But there's another point to consider here, and this is something you can ponder over. Their executives kept on executing these sell-offs, but they also didn't add shares of Palantir. People are now speculating that if they do see something good in the company, then they should be buying back the shares that they sold. It's only logical, right? This action can also bring something positive to the company's share price. When executives buy back shares, it often sends a strong signal to the market that they have confidence in the company's future. Insiders like executives usually have a deeper understanding of the company's operations, future prospects, and financial health. So when they use their personal funds to repurchase shares, it suggests they see the stock as undervalued. But that's only if they believe the current market price is lower than the true worth of the company. And that's just the beginning. This type of action tends to reassure investors who may have been uncertain or nervous about the company's recent performance or outlook. It also creates a perception that the company's leadership is committed to its long-term success and believes that its value will increase over time. They don't have to have any proof of this profitable future. Their actions alone can bring good to the company. As a result, other investors often follow suit, buying shares because they trust that the executive's insider knowledge signals good things ahead. This increased demand for the stock can drive the price up, especially if the market had been jittery after previous insider sales, like the predetermined selling transactions. So, it's normal for people to think that somehow bad things will happen to the company in the future if high-ranking officials don't buy back their shares sold at a predetermined date. And this could be the case for Palantir. There could even be rumors circulating that the fact that they didn't buy their shares back means that their S&P 500 listing may not push through. Or maybe even using retail traders as part of his exit strategy, like they're just dropping off their shares to the rest of us. Do you think this is what's happening with Palantir? Let us hear your opinion. But here's the good news. The rumors may not even be true. So, why didn't he buy the shares back? There could be tons of reasons. One of these is that buying back shares too soon after selling them might raise questions. And you know how the market reacts to things like these, right? Investors could see this as an attempt to manipulate the stock price or create artificial demand. Some might wonder if the initial sale was unnecessary or driven by other motives, which can create confusion or mistrust. Additionally, if buybacks happen during periods of volatility, it might not have the intended positive effect and could instead lead to speculation or increased scrutiny of the company's financial decisions. In a capsule, Director Alexander Moore probably didn't buy the shares back to help stabilize the company's price movement, especially since they're now on the verge of possibly getting listed on the S&P 500. And this might be announced at the end of the trading session this Friday. In general, buybacks from executives tend to support a stock price increase because they demonstrate insider confidence. However, if the reasoning behind the transactions is unclear or seen as strategic timing, it could lead to mixed reactions. Investors may be cautious, interpreting the move as a temporary boost rather than genuine long-term belief in the company's potential. What do you think of this? We'd love to hear your thoughts below. If you are curious to find more, then make sure to click on one of the videos you see on the screen. And with that, we come to the end of this video. If you enjoyed the video, please like this video, and don't forget to leave a comment in the comment section. This really helps me with the YouTube algorithm. Also, please share this video with as many people as possible. Let's get this news out there.